All right, we're headed to Chicago, Blue Line Futures, Oliver Slope. And Oliver, let's start first with corn. Something you wrote in the commentary, bull flag. What's that?
Well, the market had a big move higher to start the month, and over the last week and a half, we started to see some consolidation. And if you kind of zoom out, it looks like a pennant. You've got the flagpole, you have a sideways triangle that represents that pennant, and generally, technicians look at that as you mentioned, a bull flag. And if we can break out above the top end of that recent range, it could fuel another rally. And for July corn, above $5 seems like that level. So the big technical resistance pocket that the bulls want to get out above, 495 to 497 and a half. If we can do that, I think we get out above that psychologically significant $5 level, and then you're talking about a potential retest of those highs from February, which really don't seem all that far away right now. Fund positioning, relatively neutral in the grain markets across all of them. It's starting to get a little bit more aggressive on the buy side over the last week. Last week's commitment traders report had funds net long about 125,000 contracts of corn. And then they flipped from net short to net long in soybeans, now holding a net long position of about 26,000 contracts there. And we're really entering a great time of the year, almost like a Super Bowl type of environment for grain traders, where volatility tends to pick up seasonally with weather forecasts coming and going, pushing and pulling price action. So it's an exciting time of year. We'll get some crop progress numbers later this afternoon. I'm not so sure that those are going to be market moving, but the deeper we get into spring and summer, the bigger impact those will have on prices.
Well, we watch wheat pretty closely here as well as we enter in the harvest season. 590, is that out of the question?
I don't think it's out of the question. I will say that I'm a little bit disappointed in wheat's price action here recently. We started the morning looking pretty darn good. Big resistance at 570. We've got to get out above there to spur some excitement in that market. I would have hoped that with the rally in corn and soybeans through the first half of this month, that wheat would have been able to kind of tag along a little bit better, especially with the weakness that we've seen in the U.S. dollar, which has just gotten pummeled over the last several weeks. Typically, you'd like to see that be a nice little tailwind for commodities and in the grains sector, specifically wheat. And the fact that it's really not gravitating higher on the back of some of these fundamental tailwinds is a little bit concerning, but I'm still hopeful. So I guess you could paint a picture, say cautiously optimistic here into the spring and summer for wheat.
All right, Oliver, hang on for a moment. We'll take a break, come back, and we'll talk livestock futures. Market day are in the red. Oliver Slopes with Blue Line Futures. Oliver, when we look at the proteins, what are you following?
Well, I'd say it's encouraging that the cattle market's hanging in there. Friday's cattle on feed report, relatively neutral, maybe slightly bearish, but not overly concerning. And I would say I'm looking at this optimistically to start the week, because if you look over to the outside markets, you're starting to see some fear premium build up there with a risk-off trade. Right now, the S&P down about 2%. And so maybe that muted some of the optimism we saw right out of the gate. But that cash market continues to be very, very resilient. That June live cattle contract just within arm's reach of those contract highs at 207.72. So if the outside markets really don't fall apart here this week, knock on wood, and that cash market remains strong, I don't think those contract highs are out of the question, maybe even out above that, towards 210 in the June contract.
You talk about contract highs, that means we need to talk precious metals. The gold market has been up 29.7% year to date, and touching on new highs again. Is there still more room to go?
But it seems very evident that large central banks and money managers have a strong appetite in this trading environment where there's a lot of uncertainty geopolitically and economically around the world, and just kind of looking for a safe haven. So gold has been a sleeper for the past several years, but really coming alive in the last year and a half or so. As you'd mentioned, a strong start to the year. And really, if you look back just over the last 8 sessions, from those lows, we've rallied nearly 15%. Now, do I think it's going to continue to be a straight up line from here? Probably not. I wouldn't be surprised to see some profit taking here and there, but the path of least resistance coupled with this uncertainty around the world, I think could lead to potentially higher prices in the gold market, especially if that U.S. dollar continues to trade lower from these levels.
Yeah. All spot on as always. Oliver, thanks for popping in. We'll see you again soon later in the week. Oliver Slope is with Blue Line Futures, and